Then, there are also formulas for solvency or your leverage. So when we talk about leverage, how you use your long-term debts properly, okay, to generate to generate more income or to add more value to the company. So the debt ratio, so that's debt over assets. If that's equity over assets. Okay, so ang base niya is your total asset. Then debt to equity, so as what its name suggests, debt to equity, so debt over equity. Then you have the financial leverage, that's total assets over average common equity. So other name for this one is equity multiplier or the leverage factor. Then another common formula use kani siya times interest earned, TIE, or interest coverage ratio. Actually ang common gyud nga gamiton sa problems no kay kaning si 19 to 21 ya kani siyang 24 mo gyud na siya common formula. So, EBIT over interest expense. So, it tells you how many times interest is covered by the profit. Because interest is usually mahimo siyang fix nga naman, matawag siya nga fix because it's regular. Whether you have income or wala, interest will still be incurred, di ba? So kung steady dyan na siya nga deduction, so dapat kayang apason sa ato ang operating profit or ang ato ang EBIT, di ba? Kayang apason ni EBIT tong interest. Okay? Kay what if ang EBIT na to kay gamay ra, di ba? So minsan pa jud og interest, di ba? Ang mahitabo after you deduct the interest from the EBIT, mahimo na siyang EBT, earnings before tax. Di ba mo ano tayo basis for your tax and then net income na dayon. So kung gamay ra ta og EBIT, nga minusan pag yun og interest, pila na lang may mabilin, di ba? Nya kuan pa jud og tax sa mo gamay yung mabilin. So man siya makita dito how many times kayang i-cover ni operating profit ang interest expense. Then we also have profitability measures. Kanin siya. Very common, gross profit margin or gross profit ratio, gross profit over sales. Of course, you will determine here how much ang initial nato nga mga ma-generate after we deduct the cost of goods sold. But remember, gross profit, wala pa na siya deduction for the operating expenses, interest, taxes, wala pa na. So, dapat dako-dako gyud ta og gross profit kay napa may laing i-cover. Next is operating profit. So this time, you deducted the operating cost. So sales minus cost of sales minus operating costs, you can get your operating profit. In some books, they associate operating profit with EBIT. Okay, so before the interest and the taxes. So, same sila. So, operating profit og si EBIT or operating income. In some books, we have operating income. Okay? Then, net profit margin. This is already the net income. Okay? So, mo na siya pinakasalin. So, net income over net sales. So, these three, very common gina siya. So, dapat piyungan na rin nato if we're going to memorize this one. Kay parehas na siya nga net sales ang denominator. ROA, so RO return, if we're talking about return, basta gani ang formula niya is return on. Gana, ang return is the net income. So, muna siya nga return on assets, net income over total assets, return on equity, net income over equity. So, di ba nga na mo siya, nga na ang pamaagi para mahinumduman. Basta mo yung siya return. So, net income gina siya. Return on investment. Yan na. Another formula, aside from this net income over average total asset, you can also use asset turnover times net profit ratio. Again, you will still arrive with the same answer. And if there's an interest-bearing note, so there's a alternative pag yun nga formula, net income plus interest expense times 1 minus tax rate over average total assets. Okay. And then you have return on equity. The denominator is equity. And then we have DuPont formula. Actually, you will still arrive with return on equity for this one. Kaya nga, ini-cancel out ni mo sa sales. Iba ka na sila pag na siya sa pikas nga formula niya. Opposite siya. Kung sa numerator, kung sa denominator, ma-cancel out man, di ba? If you're going to apply the operations in math. Then, kani pong total assets, kani siya i-cancel out nimo ang mabili net income and equity. So, ang ending, ROE gapon siya. Actually, the DuPont formula is the expanded ROE. With the following components, we have the profit margin, kani siya asset turnover, unya kani siya financial leverage. Okay, so kung tanaw na to balik tong formula previously, mao ni siya tong mga components. So gibuak ang return on equity into the three components. Then okay, so you just go over the other formulas. We have ratios to measure growth. We have dividend payout, dividends over EPS, dividend yield, dividends over market price per share, kani siya internal growth, mo ni siya mga common internal growth rate, sustainable growth rate, book value per share, EVA, economic value added. Napil na siya sa pinaka-common. Then kani siya 40 to 42. Market price per share. So kani siya, dali ra ni siya hinumduman kay price over earnings. So market price over EPS, earnings per share man ni siya. Earnings yield, EPS over market price. So, ano siya? Opposite sa price earnings ratio. Then kani market to book. O dali ra kayo ni siya hinumduman kay market value over book value. So market price per share over book value per share. Okay. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.